Tell me when you're ready, Lynn.
I'm ready.
Okay.
Do you like to walk around a lot?
I'll try not to.
That's okay. No, you can. You can.
Go circle there.
Given that you're in the midst of a campaign to raise funds for your new building, Lynn thought it would be helpful if we spent just a few minutes talking about giving opportunities, specifically about a topic called planned giving. Before we dig into that, I want to take just a minute to define planned giving. It's a phrase that you might hear frequently, but you might not know exactly what it means. We could say that planned giving is in contrast to unplanned giving, but really the best way to describe it is that it is it's the opposite of checkbook giving. I think we all know what maybe checkbook giving is when you're asked to make a gift and you either pay by credit card or you write a check, and it might be a smaller amount. It's coming out of your discretionary income, your current income, so it might not be a very large gift. Planned gifts, on the other hand, give the donor an opportunity to put some more thought into the amount of the gift and potentially give a larger gift. So we think about planned giving as an opportunity to make larger gifts and potentially make a gift that is done in conjunction with the person's overall financial planning or as part of their estate planning. So planned giving, just by definition, requires a bit more thought and intention than checkbook giving. They're both important sources of gifts, but again, typically when there's more thought put into the gift and more planning done, there's an opportunity for a larger gift. And looking at some of the needs that you have for the new building, you understand the importance of asking donors to consider a larger gift and then thinking about different ways that those donors could fund those gifts. Real quickly, why do people give, and why do we all give? We want to have a positive impact on others. We want to participate in our community, give back to the community. For some people, it's important to leave a legacy. And looking at the brochure about the new building, people have an opportunity to have a room or an area or even the whole building named after them. And that is important to some people as well. Other people like to give anonymously. So that really is a personal preference. There are ways to give anonymously as well, too, that we can talk about in just a minute. For other people, tax planning is an important consideration when they're going to make a significant gift. And we're going to come back to that topic in just a moment as well. Most often, though, it's because someone asked. In your role as board members, you may have opportunities to ask people that you know if they would consider a gift to the foundation for the new building or just for the annual fund. So we want to talk about some other considerations if you're going to be talking to people about gifts or maybe considering one yourself. First consideration is how much to give. It's got to be something that's important to you, that you know is going to make an impact. In terms of planned giving or making giving part of your financial plan or estate plan, it's probably important to prioritize your gifts, have a smaller number of charities that you contribute to. Bit of a national statistic here that we added in for capital campaigns. Typically, when fundraisers are asking for gifts as part of a capital campaign, they'll ask for a gift that's 4 to 5 times the amount that would typically be given in a normal annual gift. So capital campaigns, fundraisers are generally asking for more money because there's a greater need. Keep in mind too that bequests can make a huge difference, not just for the organization that's receiving the gift, but potentially also for the donor. Different ways of giving. Cash, check, or credit card, and we would typically equate those types of giving to one-time gifts, annual gifts perhaps, smaller gifts. Somebody wants to make a larger gift, they could make a pledge that would be paid over 3, 4, or 5 years, for example. Another opportunity for giving is to donate appreciated securities like stock or mutual fund shares. And I want to give you an example of that in just a minute when we talk about some tax considerations. Other opportunities to give would be through your estate. So if you are updating your will or a trust, you can specify in that document how much or what percentage of your estate you would like to be left to a charity or charities of your choice. Another option that people don't always think of is naming a charity as the beneficiary of a retirement account, such as an IRA, a 401k, or a 403b plan, or perhaps another type of retirement account. And it doesn't mean that the entire account has to be left to the charity. It could be one of the beneficiaries, or in some cases we've seen a contingent beneficiary. So I want to leave my IRA to my spouse, but if he dies before me, then everything would go to a charity. So that's an excellent consideration, or an excellent type of giving opportunity. You can also name a charity as the beneficiary of a life insurance policy. You can give a life insurance policy to a charity of your choice. Blended gifts would just be more of a one-time gift followed by a pledge to make a larger gift over a period of years. So you might say, gee, I'd like to give $5,000, but I don't have $5,000 right now. I'd like to give $1,000 and then pledge to give $1,000 a year for the next 4 years. So a combination of a current gift and a pledge over some period of time. There are other advanced methods of giving, and some of those are a little bit beyond the time that we have available today, but I did notice, does everybody have a copy of this, Lynn? The brochure about ways of giving does go into some detail about charitable gift annuities and different types of charitable trusts. So there are additional opportunities to give that would be good topics to discuss with an estate planning attorney or a financial planner if you work with one. But they're again, more complicated, more advanced, but very effective ways to make larger gifts as well. I want to talk a little bit about the tax benefits of charitable giving. The gift that you make, if it's to a 503c organization, it is eligible for a tax deduction if you itemize your taxes. So that's a valuable benefit for making a gift. You also have the ability, depending on what type of gift you make, to avoid paying capital gains tax. And I want to show you a really quick example of that, a quick calculation. I'm just going to scoot over here to the board. Let's say that you decided you wanted to give a gift, and I was looking at this booklet, by the way, and I noticed that if I gave a gift of $5,000, that I could have the graphic design art gallery named after me. So let's say that that's my goal. I want to give $5,000, and I have shares of a mutual fund that I purchased a number of years ago worth $5,000. So I'm thinking I could either sell those shares and donate the proceeds, or I could give the shares to the foundation to fund this pledge or this gift that I want to make to the new building fund. So if I were to sell the shares and donate the proceeds, I have to remember that I have cost basis in those shares. So I look back and I see that I paid $3,000 for those shares, so I have a gain of $2,000. If I sell the shares, I'm responsible to pay the capital gains tax on that. So if that capital gains tax is 15%, then I will have a tax liability of $300 on that transaction. So my net gift now, if I'm going to donate the proceeds from the sale of those shares, is $4,700. What if instead I donated the stock in kind, or the mutual fund shares in kind? I would get a deduction for the $5,000 because that's the value of my gift. Because I'm giving the shares to the charitable organization and they are not responsible for taxes, there's no tax due either to me or to the foundation, the recipient of that gift. So I am able to make a gift of $5,000 instead of $4,700. Now I could still, in this case, I could still make up the additional $300 and make a gift of $5,000, get the full deduction, but that would have cost me $300 in taxes to do. So we think that gifting appreciated securities and avoiding paying the tax makes an awful lot of sense for donors, and it's also very attractive to the receiving organization. What they'll do is they'll immediately sell those shares and they will use the proceeds for their funding needs.
So then if I donated that 5,000 in mutual, then I use that whole 5,000 as a tax deduction?
That's correct. Yeah, so you get the benefit. Now this becomes really powerful. I use $3,000 as the basis, but let's say I bought those shares for $500 20 years ago. So I've got a gain of $4,500. And that is not uncommon with the increases we've seen in the stock market in recent years, that to see those large gains on investment values. So it is a very powerful way. You get the deduction for the full value and you're not paying the tax. If you were to liquidate it first, you would have that tax liability.
Plus you've got fees if you want to liquidate.
You know, that's an excellent point, and I didn't even address that, but you're going to have transaction costs to sell the shares. So, excellent point. If you give, now this is a provision that is not available every year and it comes and goes, but there has been a provision recently available for people who make a charitable gift from their IRA when they are, they have to take required distributions from their IRA. Instead of taking the required minimum distributions, exactly, is they can gift that money to charity instead, and they avoid paying income tax on a retirement distribution. In some cases, for folks who have a potentially taxable estate, it makes sense to give gifts during their lifetime to reduce the value of their estate and therefore reduce the estate tax liability, or to structure their estate plan so that there are gifts made at the time of their death that would reduce the estate tax liability. So some really powerful tax benefits for gifting as well. That concludes the discussion about planned giving. I know we really didn't dig into any of the more complicated or sophisticated types of giving, but if you have questions, please feel free to contact me or Jeff. And I think that the brochure, the Ways of Giving, does a good job of describing some of those other options And it's nice that you have this to give to people if they're interested in making a larger gift or, or doing something as part of their estate plan. Any other questions or? I know we want to loop back and see if there are questions about the portfolio, about the investment policy statement, or anything else about